right. Good morning or good afternoon, everyone. Uh, Welcome to the webinar. And we'll maybe give it extra, 2-3 minutes as people sign up, and then we'll start officially. So uh, we'll keep you posted. Okay, so let's begin. People will be joining in the next 5 minutes, but I think we can start with the introductions. So, good afternoon, everyone. My name is Marek, and I'm the CEO and co-founder of Vestberry, a portfolio intelligence software for venture capital funds. And today, I have the pleasure of hosting a fireside chat with Leah Welch, investment associate at AR Capital, a Geneva-based multifamily office. And together we'll dive into the LPs perspective, or into the topic of LPs perspective on data-driven VC and how it's shaping the venture industry. Before we begin, I would like to actually hand it over to Leah to introduce AR Capital first.
Yes, of course. Thank you for having me, Marek. I'm happy to be here. I'm on the investment team at AR Capital, and it's a single family office based out of Geneva, where we're mainly allocating to hedge funds globally and also venture capital funds. Prior to that, I've worked in startups and tech companies and also corporate consulting. So just, to give you a brief overview about my work at AR, I regularly meet with fund managers and evaluate funds, try to keep our, growing pipeline organized, and then also do due diligence on potential investments. Then on the sort of post-investment side, it's more of the portfolio management work. So that's monitoring fund performance, doing, the detailed quarterly tracking and reporting for each of the funds in our portfolio.
Awesome. Thank you, Leah, for this introduction. And so, what's on the agenda today? We have four topics for the next 45 minutes. At the end, we'll leave around 10 to 15 minutes for Q&A. So please feel free to post questions in the chat, or have a discussion alongside. I'll try to be flexible enough to read that and pick up some of those topics alongside. But what's on the agenda today? Then we'll start with the LP lens on data-driven VC, looking at how LPs see this trend shaping the industry. Secondly, we'll discuss transparency and trust in data and why these are crucial when it comes to building strong LP-GP relationships. And thirdly, we'll dive into the metrics, actually. So we'll look at some of the concrete examples that matter to LPs, what data points they focus on when evaluating GPs and portfolios of those GPs. And the last topic will explore some of the opportunities and challenges of data-driven VCs from the LP perspective. So let's dive right in. Um, okay, Leah. So again, thanks for joining us today, and we'll start with I would say a broader picture on the industry. How LPs perceive the shift towards data-driven investing in venture from your perspective?
Yes, so I think that, historically, VC has relied heavily on, network relationships and sort of gut feelings. Um, But now, of course, with the rise of, everyone trying to implement, AI and data-driven practices into their organizations, you see, some different funds trying to do this in different ways, some maybe, not quite implementing anything. But I think from an LP's perspective, maybe we're looking at, 500 or more funds per year. And so we really need more kind of systematic frameworks to evaluate the funds, to look at, kind of weighted scoring against different criteria and metrics, and also, sort of tracking the, success metric, attribution, and where that comes. So the shift, it's real and happening, but maybe adoption is a bit uneven, and I think the industry is kind of still figuring out how they balance being truly data driven with the more kind of human side of things and the qualitative metrics or data points, information that we look at.
Mhm. And when you are approached by a fund that claims to be data driven, so when you hear it, what does it actually mean for you from the LP side when you receive an LP deck that claims that this is their or part of their core strategy?
So I would say that, those who are making those claims, it's actually quite rare. So most are not talking about this. They're not talking about this, being a core differentiator. We have come across a couple instances of funds that are purely data driven. So I think it's something that you're just starting to see. There's one example of a fund that is, truly native, data driven, using AI. They've built a proprietary platform that tracks teams against 400 or more factors. And they're applying, machine learning models and LLMs to the data. So, this starts from sourcing. And so one of their kind of sourcing methods is really focused on talent. And they're trying to kind of identify these team magnets through networks, through education, through past employers, and doing that kind of track record network mapping. And this is, one fund we've looked at and evaluated, and I think we're really quite interested in their model because, again, it's something we're still not seeing so much. I think they're focusing more Series A, Series C, and for us, it's really interesting to see kind of a clear attribution of their sourcing and how that correlates to the performance. And it looks like, at least in their fund one, they did have good performance. So we're excited to see kind of how it goes for them and track them a bit more.
Mm-hmm. Maybe a follow-up question to this. So when you see, let's call them innovations, or let's say data-driven activities on the sourcing side compared to the portfolio or post-investment side, what is more important to you, to see how they source the deals or how they work with the portfolio companies and apply data strategy or data practices?
Both. So I think
Equally balanced, yeah.
yes, exactly. And I also think that given the number of funds that we evaluate, it's a highly competitive market. And we're also, we have our mandates, and, we can't back every fund. So we're very quite selective in the funds that we do commit to. So I think both are equally important, to be honest.
Mm-hmm. And do you think this is going to become an expectation down the road to be, let's say, more digitized, more structured, to have access for LPs to have access to the data or underlying portfolio data? Do you think this is an evolving expectation going forward?
Yes, I think one thing, we do expect to have that underlying portfolio data, especially in, when we're evaluating funds. We really do detailed reviews of their track record, and that's going into detail of every investment they've made in the past. For the funds that we have committed to, that's something that we track, monthly and quarterly, and really do look at, detailed analysis on how each portfolio company is doing. And I think that, there are going to be evolving expectations about how firms are using data in their processes, all the way from, network building, sourcing to, the term sheet signing. But I think that um, I, I'm not sure that every fund is going to adopt these, purely data-driven strategies. I still think, based on the industry, that relationships and people are really going to matter, but I do think you'll see more funds using these practices.
Got it. Thank you. And to what extent do you benchmark funds against peers when deciding to allocate capital? How much do you rely on the GPs to provide comparative context?
Um, So I think that every fund that we evaluate, we do benchmark, and we'll benchmark in a couple of ways. We'll benchmark, industry as a whole by vintage, using, sources like Cambridge, et cetera. And then we also benchmark the funds against other funds in our portfolio of similar vintages. So we do a bit of both. We do expect the GPs and the funds to provide us enough information that we can do it. But then we also, go and do our own research to sort of make sure we've done our homework.
Hmm. And where do you see the biggest gaps between what LPs want to see and what GPs provide currently?
Mm. Um, I think this is on a fund by fund basis. Um, so I think in general, what we like to see, we really like to see those detailed quarterly reports. Of course, we get the financial statements, but we also like to see really detailed information and data points about each portfolio company. This is something that I go through every quarter, line by line, to
Yeah.
track, each metric that we're looking at in their underlying portfolio company. Um, I think that it's also really interesting. Some of our funds will also send very detailed LP updates where they'll actually go into kind of also more of the stories behind the funds, behind the founders, sorry, behind the companies, behind the founders, how they source the deal, why the company, chose to, let them in the round. So those are all things that we look at. I'll say that some funds provide more information than others. And so when we're lacking the information, we have to go back to the fund to request this. So we do very much appreciate the funds that are much more proactive and, just send, consistently, each month or each quarter. It makes our jobs a bit easier.
Yeah. So the quarterly reporting exercise, of having the LP reports is something that is more or less standardized by the Invest Europe guidelines or ILPA standards. Uh, is that sufficient from your perspective, or would you appreciate some extra, maybe some kind of story behind, the portfolio companies and maybe more context, or is that something that you see as sufficient at the moment?
I think it's a bit of a mix, and again, it depends on the fund. But the standards are certainly those quarterly reports and financial statements. That alone is not quite sufficient for us. So we do appreciate the funds who do provide that extra information. When the funds don't provide it, that's either me having to go and do the research myself, which obviously takes up quite a bit of time, or having to go back to the funds to request that additional information from them. I think some other things that would certainly make our jobs easier and more efficient in terms of time would be kind of ways of processing all of this information that would then kind of automated upload into our own systems, because much of this work is done very much manually, even though we do have, tools that we're using, platforms that we're using to do our own tracking and reporting. There is still that kind of manual conversion work that needs to be done.
And just following up on what you just said, could you tell us a little bit more about what kind of tools you're using? I think you have something proprietary built, how the tech stack looks on your side
The
from the
tech.
LP perspective.
I think the tech stack is an evolving process, and we're
Mhm.
you know we're also trying to sort out how we can be more efficient in our processes. But I think there are some challenges with that. One being, if we have 20 funds in the portfolio, for example, they're each sending us their updates on a different date in a slightly different format. So that's just all of that, information organization that we have to do. Um, so we're storing this, in a secure kind of drive. And then it's really just me manually, reading each report, each LP update, each email line by line, and then transferring all of that information, into a spreadsheet. We also use Notion. And then once we kind of have all of the detailed baseline data that we're looking at, that then gets transferred into a platform that we use for our tracking and reporting. And this is a platform that was built in-house by one of our team members, built, specifically for our needs as a family office, with given the asset classes that we work with.
Mhm. Gotcha. All right, thank you. Let's move on to the second topic, the transparency and trust in data. Um, there's a lot of talk about increasing transparency between LPs and GPs, and data is basically a core part of that. So what's your take on the role of data transparency in the LP-GP dynamics relationships?
So I think that data transparency, it's really just an expectation rather than kind of a wish. Any fund that we're seriously evaluating, or might, choose to back this, we're viewing this relationship as, very long term. We do a lot of early stage investing, in funds that are pre-seed seed. So this is really, 10 years plus. Um, and then, we also want to build that relationship over time, follow on future vintages. So I think that, this is just an expectation from the outset. And it helps us kind of move past the kind of gut feelings, faith-based, to, more evidence-based kind of conviction in the funds that we back. And we appreciate the transparency, both in how the fund is doing, the current fund that we've backed or invested in, the current vintage, but then also going back to track record, because like I said, before we make any commitment, we really do a detailed review of their track record line by line. So this can either be, if it's a more established fund, looking at their prior vintages. If it's, a first time or emerging manager, we'll also look at their angel track record, or track record with a previous firm. I think sometimes if it's with a previous firm, they may be limited in the data they're able to share, but they do try to share, as much as possible, as much as they can. And we, really appreciate that. We also really appreciate, GPs both sharing kind of the wins and the challenges. And also, if it is a win, if they did have some success, um, kind of sharing a bit more of the attribution on that. Why was it successful? Why were you, a key player in the company's success? To sort of rule out, okay, was this just luck? Was this a one-off, or is this kind of something consistent that they're doing with each company that they are backing?
Hmm. And maybe this is going to be a tough question, perhaps. But if you would have like two funds in front of you, one with a stellar fund performance, but let's say not so transparent on data and portfolio performance, but they are returning money, and then there is a fund that is very diligent, reports well, but let's say mediocre performance. How would you evaluate these two variables?
I Yeah, that's a very difficult question. And to be honest, also not something that we come across because, like I
Yeah.
said, the transparency of the data and information that they provide and their track record, it's an expectation. So if they can't provide the details that we need, it's definitely a red flag. I don't think we've fortunately run into too many problems of this. But yeah, we would
Yeah.
probably have to go with the former.
Yeah. So it's
Or
a
the latter.
KO criteria for you at the beginning.
Yes, exactly.
Yeah. Got it. Okay. Now let's move on to the hot topic of AI and in the LPGP world. Do you believe AI has a role to play in surfacing insights from GP data for LPs? And perhaps do you see this trend coming from the GPs that maybe they're introducing some AI tools? What's your take on the AI in this context?
Yes. So in terms of, AI tools that funds may be using, other than the fund example that I mentioned, who's really had built their kind of proprietary ML models to source. I'm not quite sure how other funds are handling, AI in their day-to-day work, other than, what we all do, certainly of, drafting emails and
Mhm.
memos and kind of helping with our writing. So I would be interested to hear how other VCs are thinking about this. Um, I think in terms of the work as an LP, I've mentioned sort of some of the difficulties in kind of information gathering, and also s- formats are not kind of standardized. We're getting different things from different funds. So I think that certainly something that could help as an LP would be in the data processing aspects. Um, and I also think that if you give an LM a particular data set or even kind of qualitative information, I think it can be really good at um, really clearly showing patterns,
Mhm.
in a very like clear, structured way, that a human could do too, but it just might take us a little longer to get there.
Mhm. And do you see an increased adoption of new tools with the AI wave, or they present it to you? What's how they operate in the middle back office parts of their job?
Um, for VCs, I this is not normally a topic of discussion.
Hmm.
It's also not something we're quite looking at. If we're evaluating a VC, we really want to know, who are they as GPs? What is their experience? What makes them really unique and stand out and differentiate among other funds? Um, what types of deals they're able to source and access, and really performance. So how they're utilizing AI tools in their kind of workflows is not something we've specifically looked at in the past, except for these kind of purely data-driven, sourcing fund models who really do have something quite differentiated between what other funds might be doing, but it's not, necessarily an evaluation criteria.
Hmm. All right. And to wrap up this second topic, what kind of data transparency do you expect from your GPs today? So fund level, portfolio level, something extra, perhaps outside of the standardized reports that you receive.
Yes. So when we are evaluating funds and, also doing the tracking and reporting on funds in our current portfolio, um, we, at least on the evaluation side, a lot of this work is, qualitative, which I'll touch in a minute. But then we've also tried to kind of come up with a systematic process where we have, a 23 category matrix across different points. And these include, the hard kind of data points and performance metrics, but then they also cover, more qualitative things like sort of the synergy between, the GPs, the quality of, their co-investors, the quality of the GP's network, maybe light personality traits, I would say. And we're using this to try to quantify those things, so that when we are making those decisions, we're able to kind of easily see, the score of one particular fund against the score of another fund.
Thank you, thank you. And now let's go on to, let's say, more concrete areas of being data driven in venture. Um, what metrics or what kind of portfolio data makes you feel confident that a GP is in control of their portfolio? Um, do you have any examples of for this?
Yeah, absolutely. So I think at the fund level, we're using the classic, LP metrics, TVPI and DPI. These are the two most important things at the fund level, in terms of data, point metrics we're looking at. At the portfolio level, we are looking for, line by line, each company that's been invested in. We're looking at, the investment size, the ownership percentage. We're looking for evidence that the GP, brought value add to the company. We're looking at a clear follow-on strategy, if that's relevant to their type of fund. And we're kind of mixing together, both the quantitative and qualitative metrics. We're looking at the team, their background, like I said again, what makes them truly unique and differentiated. And then, similar at the company level, what types of funds, or sorry, companies are they backing? Who are those founders? What are their stories? What makes them unique? Why the fund chose to invest in them? We'll, if available, which they often are, we'll look a bit at the maybe investment committee notes, just to kind of see what their decision process is like.
Hmm. And when assessing a new investment, a new LP allocation from your side, how important is the accessibility of their portfolio data, right? Sometimes even in the investor guidelines or ILPA guidelines, you get a one pager. Sometimes it's not enough. Is that a requirement for you to have access to portfolio data and to have that insight into the underlying portfolio companies?
Yes, I think as I mentioned before, it's, an expectation for us. It's kind of a non-negotiable.
Mhm.
Like I said, there are exceptions, if the GP, um, their track record is mostly based on a previous fund. Sometimes they're a bit limited in everything that they can share. But we do expect them, to share the most that they can. And so usually they're quite, proactive about being transparent with this. If a fund, can't provide us the data on their, track record or, underlying portfolio companies, it makes it impossible for us to evaluate, frankly.
Mhm. Got it. And from the analytics perspective, would you prefer more forward-looking, let's say predictive insights from the GPs, or is the historical performance reporting the core fact and you don't have the requirements to, I don't know, look at where the portfolio will be in the next 2 3 years, build some kind of portfolio construction models? How do you balance these two, forward-looking and historical performance reporting?
Yes. So I'll say that we look at both. So I've already kind of covered what we look at, in historical reporting, and this really matters. It's good for us to see, consistency over time. Um, but then, of course, we look at their sort of projections. So we want to see their portfolio construction. So, what stages are they targeting? What sectors, are they focusing on? What geographies? The total size of the fund, how many companies or commitments they want to make. We are looking at, yeah, all of those factors. I think I missed a few of them. I also think that, it depends a bit on the fund strategy. So we've come across instances in certain types of funds where the fund has kind of already drafted a pre-identified list of their target companies. And they're doing things in a very sort of systematic way. Not every fund can do that. Not every, some are looking at early stage, some are looking at late stage, so it depends. I think that we do see some insights about, what they are thinking about in terms of future performance, what things might look at. Usually funds will provide us also with a fund model. Not every fund does this, but many funds do. So this is also something that we like to look at, because again, we're investing in the future, not necessarily the past. So we kind of have to take both into account.
Would you say it's a differentiator when you see that?
Yes, absolutely. Absolutely.
Gotcha. And what would you say are the key signals you can surface from the GP data?
Key signals. So I think one would be sort of success attribution. So I already touched on before, if a certain fund has had previous successes, why? So how did they, let's say, get into the deal? How did they meet the founders? Was it, who from their network, introduced them, where that kind of relationship came from, where it was built. Other signals looking at that would be the sort of deployment discipline. So are they, deploying too quickly within a certain period of time, or are they, maybe not deploying fast enough, which is not usually the case. We also look at, the co-investors, both on the rounds that they've invested in, but then also follow-on rounds. So that's also a key signal of success.
Got it. Thanks. Let's move on to the fourth topic. Those are the opportunities and challenges of, let's say, the future of venture or data-driven VC. From your perspective, do you think that data-driven practices will become a baseline expectation for all the GPs in the upcoming years?
So this is a hard question to answer. I would say yes, but with some nuance. I think at a certain level, it's already an expectation. Based on, like I mentioned, based on our 23 category matrix, we need data to fill this out, and kind of give them a scoring. We need to see kind of systematic sourcing by the fund manager, kind of their IC frameworks and their investment decision process, and how they're thinking about each company. And then again, we really need that transparent reporting of very detailed information about each company in their portfolio. And I say with nuance because I don't expect every fund to be a purely data driven, using AI models, from sourcing to signing the term sheet. I think that relationships, the human side of things, still have a really big role to play, especially in early stage investing. And you also have to consider that, at least today, still, people are running the companies,
Right.
not robots. So those are, still important things you have to keep in mind. But I do think, these data-driven practices, it's kind of becoming much more of a, expectation and a baseline, and I think that's going to evolve with time. And I think we're all kind of in the middle of figuring this out and how to balance.
Right. Interesting. You mentioned that robots are not running venture funds yet. I think I just recently saw a fund. I think they're called No Cap. I'm not sure if you heard about them, but basically you can pitch an AI avatar that at the end of the presentation, it automatically decides whether he's going to write a check or not. So we are getting there.
Mhm.
Yeah, we'll see.
Yeah.
Okay. Moving on. What innovations in, let's say, fund reporting or portfolio management would make your life 10x easier as an LP? And maybe you can uh, consider it from the GP perspective, like what improvements they could make, but maybe also from your side as an LP, what would make your life easier?
Yes. So I think one thing is, I mentioned earlier that, in the funds in our portfolio or even funds that we're evaluating, we really are doing that kind of line by line, looking at each company and each company's details. And so I think that, many funds are good at providing all of this information, sort of outside of the quarterly financial statements. But I think that also many funds are not providing this information in the level of detail that we need on our side, which just requires a lot of kind of back and forth and follow-ups on our end, maybe a bit of our own research, where the fund certainly has all of this information available. I think just, formatting it and presenting it in a way that's, makes our work a bit faster, a bit more efficient, is something that certainly would help. So sort of just that proactive data and information transparency. Um, I think that another thing that would help, and I'm still waiting on the solution and the fix for this, is we get information, data, updates, reports from funds in various formats. So how can we kind of standardize those formats and also kind of have some sort of automated process to put that into our systems? Because like I said, right now it's just a lot of manual, line by line processing work on our end,
Mhm.
which is good on one hand because I have to do a really detailed reading of everything that the funds send us, and so that kind of enhances my own knowledge. Um, but then on the other hand, sometimes it just takes too much time, and there's
Mhm.
too many things to do, too many funds, too many companies.
Mhm. So maybe just to get more clarity on this. So even though there are standards how to do quarterly LP reporting, you still see funds that don't follow those standards, right?
No, not necessarily. I think, the standard is certainly, quarterly financial
Yeah.
reports, that hasn't changed, that won't change. I think where things deviate are those sort of additional
Mhm.
information and kind of detailed, company by company overview.
Mhm. I think this is a great use case for AI, actually, right? Because
Mhm.
unstructured, maybe different data formats could be standardized with AI. We'll see. We'll see
Yes,
where it takes us.
exactly. And I think that maybe a bit more um, kind of forward thinking, innovations, tools, things that could help are, then processing all of that information and being a bit more predictive, kind of giving us predictive insights, showing us, clear patterns, maybe kind of flagging anything that's, risk factors, flagging, our kind of exposure levels in any given sector, geography, etc. But then with that, also kind of doing maybe some early trend detection.
Mhm.
Um, so, we know what kind of what sectors, what companies, what types of technologies are sort of hot right now, but what is that going to be, 1 year down the line, 5 years down the line, 10 years down the line might be too much, just given the kind of rapid pace that things are evolving. But those would definitely be some really helpful tools to have.
And do you expect GPs to adopt, let's say, these type of tools, or kind of, let's say, AI native tools in the next few years? And would this influence your allocation decisions? Um, how would you consider that?
I would say absolutely. I think that um, you're going to see, people who are adopting more AI tools are just going to be more efficient and faster and able to
Mm,
do more. A human, we only have limited time. And so we have to spend that time wisely. And so the ones who are not, adopting these tools are going to kind of lag behind. And I don't think that's just in the VC industry. I think that's across industries. And so, everyone is thinking right now, how can they kind of effectively and efficiently use different AI tools in a way that makes sense for them, not just for the sake of, using AI, but what's kind of the value add factor there.
got it.
And I think, will we use this as a evaluation criteria? In the near term, I'm not sure yet.
Mhm.
We'll see how that evolves in the future. But I think, I mentioned before some of the things that we look at when we evaluate funds, and they're just higher priorities, on the list right now.
Got it. And from your experience, what are the most common overpromises that you hear from the GPs and that you're cautious about?
I I wouldn't necessarily say over promises. I think, we have a, you know, very good quality kind of like, sourcing and how we find managers. We rely heavily on warm introductions, from people in our network, from other funds we backed, other LPs. And so I don't think that we're seeing a lot of instances of over promises. Um, I do think, we see patterns in what GPs or funds are claiming. Um, I think a big one is sort of network.
Hmm.
So a lot of GPs, they will, one of their differentiating factors is their unique network.
Hmm.
Um, but every fund is saying they have a unique network. So what does that actually mean? And do you have a unique network compared to all of the other managers who have a unique a network? So it's not necessarily an overpromise, just kind of a pattern that we see. Um, so that would be one thing. I'm trying to think of any other sort of overpromises. Yeah, like I
And
said, it's a tough question because we don't
yeah,
really cross overpromises.
but I think the network is quite interesting one. So how do you validate this one? How do you make sure that what they're saying is true, right? Like
Yeah.
because it's all about access, right, to the
Mm.
founders. So how,
Yes.
how do you validate this?
A few different ways. So I think one, it starts from kind of the source of how we met that manager.
Hmm.
So usually this manager has come, introduced or recommended by someone else. And so, it is important who that someone else is, and kind of where they fit within our network, how close we are to them, and also, their reputation. Um, and then, we also do kind of reference checks. We ask the people that we know in our network, what do you think of this person, the work they're doing, and we kind of do those validation checks. I think sort of also more advanced to that. It's also speaking to one of their portfolio companies. If they worked for a previous fund, speaking to that fund's partners. Um, and we'll also, so we look at all of those things.
Mhm.
to try to kind of validate the network. Um, and seeing we also like to look at kind of the detailed stories about how they met the founders, how that relationship was built. Are they it also depends on the stage of investment for the fund, but how active are they in kind of portfolio management and providing that value add to the companies. Um, so while most funds will claim some sort of differentiated network, we do like to dig a bit deeper into that.
Mhm. And maybe this is the final question before we jump into Q&A. But something that came to my mind: first-time fund managers, right? They usually have a hard time with the fundraising. So, what would you say are your evaluation criteria for first-time fund managers? Well, first of all, whether it's interesting to you at all, and secondly, yeah, what is the playbook to to get money from you?
Mhm. Oh, yeah, well, so I think that, as a European family office, we are quite open to backing first-time managers, and this is also something that makes us different from other LPs. And so, the family office has been investing in venture funds for the last 20 years, and hedge funds for the last 40 years. And, so over time, that kind of experience and confidence has been built. And
Mhm.
also just kind of tracking performance. It's kind of a key part of our strategy, to find, the best emerging talent out there and back them early and kind of build that relationship long term over time. Um, and you'll have to repeat the question for me because I lost my
Yeah.
train of thought.
The last part was, what would be the playbook? How can a first-time manager approach AR?
Ah, yes. Okay. It's a good question. And also, the way that we operate is, very different from other LPs or other family offices. So, just because I say one thing doesn't mean it's, how it is across the board. But I'm sure people understand that. Um, but our sourcing really comes from network. So, like I said,
Mhm.
this is warm introductions. We don't really I mean, and also just given, the quantity of, how many introductions we get, there's a lot and we can't, evaluate every fund. We can't meet with every fund. Um, and so it's important to have introduction. So if you are, thinking about going to an LP, it's important for you to kind of have your own network of, other GPs, other funds, and say, hey, you know, who are some of your investors? Would you be willing to introduce me to someone? Um, so, our approach, we don't really like the kind of cold outreach, just because this is also part of our kind of evaluation criteria and how we know, that we're kind of on the right track in terms of, the funds in our kind of ecosystem. So that's very important, having that introduction. Um, and then also, again, this is something that differs from LP to LP, but we do really like emerging managers. We do really like young first time managers. So we like to see, how are you unique? What's, what are the very kind of special things about your personality or your interests or your hobbies? How are you as a first time manager thinking about, VC as a whole? How are you thinking about investment decisions? And I think we're also seeing a lot of the, I guess, new generation of managers having different ways of seeing things. And they're kind of trying to, really formulate thought leadership around, how they want the industry to evolve.
Got it. Amazing, Leah. Thank you very much. This was a very clear answer for me. Let's dive into the questions. We have last 10 minutes of the webinar. So I'll select, so we have four questions. So I'll go ahead and put it up. All right, so we have a question from Matt. What's your preferred valuation marking methodology for GP's performance, i.e., only changing when a price round occurs, using comparables, multiples, etc.?
Mm. This is a difficult question, but it's a great question. Um, it's it depends on the fund's strategy. It depends on the stage. Is it a pre-seed seed fund? Is it later stage, Series B plus growth, or is it a secondaries fund? So this depends. Um, if we're talking about early stage pre-seed seeds, um, I think it can be a bit of a mix. So we do look at kind of the estimated markups, let's say, but then sometimes if a fund has backed a company at a seed level, it might be within 6 months they end up raising a Series A, and so then we actually look at the you know the valuation of that to kind of compare. Um, so to give a very confusing answer to your question, we use a mix of both depending on
Mhm.
the situation.
Perfect.
And
Thank
we're
you.
we're flexible with that.
Mhm. All right, we have a few more, so let's go through a few of those. Okay, from Alan, do you believe that due diligence can be automated, and by when can we see these solutions come to the market? I
Mm,
guess this is from the LP perspective as well.
yeah. Um, that's a good question. I, for example, this fund that venture fund that I mentioned earlier, um, they have essentially automated this process. So they've kind of automated the sourcing process and the diligence process. So that's something that can be done now. Not every fund wants to do that. Not every fund, or LP wants to do that. Um, but it is something that is being done now and can be done now. From an LP perspective, I think we are looking at ways to use AI more in the due diligence process, but with heavy human intervention.
Hmm.
Because like I said, we come across, we meet, we evaluate many funds, and we have to be very selective in the commitments that we make, and so that also means that we have to give a human touch to this. Will all of that be automated someday? Maybe. It's very
Hmm.
possible. I think it's kind of on a, you know, either fund to fund or kind of LP to LP sort of decision making process about how they want to handle that.
Got it. Thank you. Let's move on. We have a question here. Yeah, this is on the data-driven VC topic. So, what characterizes the front runners in the race to become data-driven VC? Which part of investment process should be more data-driven, deal sourcing or investment monitoring? What tools or processes have you seen these VCs using?
Um, yes. So I think that, as I said, those funds who are, purely data driven are rare, but we are seeing more and more of them. And sort of which part of the investment process should be more data driven. Um, I think that all of them can, but it also depends on the fund, what they value more, and how what their processes and decision making frameworks are. Um, this firm that I had mentioned, that's sort of purely data driven. They're data driven in every step of the process. So that starts with their sourcing. So they've built, an ML model, different algorithms to kind of aggregate different data sources to sort of pinpoint which investments they should make before that company is even raising money. And so they're, really using these data-driven processes in a detailed way from the sourcing perspective. And then they're also using this in the diligence process. For investment monitoring, I think that this is the most, low-hanging fruit in what we can and should be using AI for, because this is really kind of more performance tracking, risk flagging. And I think that, with where AI stands right now, it's very good at doing those things. I just think we're needing better tools to kind of enable this, and also, security of tools. A lot of the information that we're dealing with is, highly confidential, proprietary. It's, not something everyone wants, laying around everywhere. I think that's, monitoring certainly the most clear way to use AI tools. I think on the sourcing and due diligence process, like I said, VC is very heavily still relied on, relationships, people, network, and also, looking at the story behind the founder, the story behind the company. And so I think depending on the strategy of the fund, you need a mix of both, or maybe you want to lean heavily one against the other. And I think the kind of jury is still out on where AI can play a role in that.
Thank you. I'll select another question that is slightly connected to this, which is part of the, let's say, portfolio monitoring process and valuation. So, do you think we'll be able to automate valuations of startups and be able to apply generative AI to de-risk our investments? So, what do you think about the valuations? It's quite a
Yeah,
tedious, sometimes, well, oftentimes manual task.
yeah. I certainly hope so, and I think it can be done. I also think this, probably would be better suited to, a VC who's looking at valuations every day. I kind of only get the high level, overview of these points. I think it's a great kind of use case for AI, and I think it can certainly help and kind of just also is kind of not necessarily a fact check, but like, help you think about your decision making process, and maybe also point out things that you haven't considered before. And also kind of recognizing historical benchmarks, how the market is now. I certainly think you should be able and can be able to evaluate startups. There might be other factors that AI can't quite, maybe doesn't necessarily have that, like I said, human context for these things. And certainly to de-risk, there's opportunity there. But de-risk, I just mean, kind of giving you, different frameworks, different questions to ask, maybe kind of flagging patterns that you didn't necessarily pick up on, or
Mhm.
pointing out things you haven't quite considered.
If I could add to this, I think it's also about the time to information. I think just AI is super fast, right? And just to know what's happening in the portfolio or in the fund just gives you that advantage to act on it. So
Exactly.
yeah. All right, so we'll do last question. We have the last minute, so apologies if we could not answer all of those, but let's go with Peter here. With AI in view and its respective regulations, how do you approach a data consolidation strategy across different sources? CRM, portfolio management, contracts, quarterly reports.
Yes. So, I mean, this is also a challenge that I face, that we
Hmm.
face, because we are getting in data and information from so many sources in so many different formats, and we have, various tools that we're using. We're using a CRM. We're using let's say, various portfolio management tools, sort of various kind of pipeline organization and management tools. Um, so it's, I think that there's a problem that not all of these systems and sources kind of connect to each other.
Mm.
And so that sometimes requires, you're just doing more duplicative work. And I think those, processes can certainly be streamlined. We're constantly, well, not constantly, but when we have time, we're sort of evaluating new tools and, how we can be more efficient in our processes. But we have not found the perfect fix yet. So if anyone knows of the perfect fix, please do share.
Actually, what I'm seeing from our side, because we are basically like one data point about single source of truth about your portfolio companies, but those that really want to consolidate it, they build a data warehouse layer where basically all the data points come in, kind of clean them up, connect the dots, and then you can put AI on top, or there's some intelligence layer. But it's a lot of work, a lot of data engineering work. So
Mhm.
yeah, hopefully there's something coming up soon, easier. Amazing. All right. That's it for today. So thank you very much for joining us. Thank you, Leah, for providing us with all these insights. I would like to also invite you for our upcoming event, which is a physical event in Prague, taking place on the 29th and 30th of October. We'll bring the data-driven VC community together. There will be a bunch of workshops, presentations, and drinks and food as well. So we'll get to learn from each other. So again, thank you very much. If you have any questions, feel free to reach out to Simona or basically the Vestberry team, and we'll be back with you. So thanks again. Bye
Thank you,
bye.
Marek.